Business Development Manager for Enterprise Singapore, based in Accra, and overseeing the West and Central Africa region. It is our pleasure to have you join us for this roundtable. A few housekeeping rules. Okay, so everyone has joined this on mute, and this is to enable us have make it easy for us to be able to have this conversation going. And if you have any questions, you can use the Q&A function. This session is being recorded for internal and marketing purposes, and also for future use. If you have any ones that you feel this session will also be useful to, you can share the webinar details to them, and then they can join us while we keep on with the conversation. At this point, I will hand over to Jean to give us the opening remarks.
Thanks very much, Clement, and good morning, good afternoon, everyone in Singapore. I think it's interesting times for the West Africa region with regards to the oil and gas industry. I think over the years, we have seen increased production of the number of barrels of oils with some of the market leaders or country leaders in this region, which I'm very sure that Clement will touch on in his brief industry update later on. But I would like to thank our partners, UOBO, Baker Hughes, as well as MODEC, with regards to coming together to have a short panel discussion as part of this industry update. I think it will be an interesting conversation at the end of the day to kind of also find out what is the new upcoming projects, existing challenges, existing local laws that needs to be paid attention to, that will be crucial for Singapore companies who are looking to kind of enter the region and to engage in some of these projects. So without further ado, I will hand the floor back to Clement to start his presentation. Thank you.
Thank you, Jean. So we'll have a quick sharing on the oil and gas industry in West Africa, and then we would move ahead onto the panel discussion. So African governments are broadly moving to improve E&P terms, exploration and production terms, with the aim of expediting upstream investment and avoiding the risk of being saddled with stranded resources due to the global push towards clean energy. This has led to about 50% of African countries having made discoveries or at some stage of upstream oil and gas development. The move is to develop oil and gas resources. This move to develop oil and gas resources will also partly account for the expected continuous growth in Africa's oil and gas production till 2023. The growth will largely be driven by gas production. The growth in production is expected to alter top producers' league for Africa, enhance energy security on the continent, and deepen the narrative on sustainability with a move by the IOCs to adopt low emissions, low cost approach for project development. The growth in production is partly driven by the need to replace supply from legacy fields in order to maintain government revenues. It will also be driven by increased demand for gas, the global exploration drive, and the development of key enablers, such as the Africa Energy Bank, which is to fund oil and gas projects in Africa. Also, the support by various governments to help small players to pick up on the slack of the IOCs, and local content policies that would help build capabilities to develop the industry. Africa's oil and gas industry, like any other in the world, has challenges. In this case, they include the government bureaucracies, complicated compliance regulations, financial risk, such as currency depreciation, FX availability for repatriation, security and safety concerns in some parts of the continent. Adhering to local content policies by selecting a good local partner is the key to unlocking many of these challenges. The local partner plays several roles, collaborating. The local partner plays several roles beyond collaborating for the project execution. They can help to mitigate financial risk by helping to ensure timely payments for projects, availability of FX, or whether you have to remit in USD or Euro. They ensure the availability of these funds for repatriation, and even sometimes help hedge against currency depreciation. In this year, we've had about 3 Singapore companies execute projects in Nigeria's Port Harcourt region, a region that many may see as high risk. However, the local partners for this project provided the needed security and safety and helped to have this project completed without any incidences. Local partners can also assist in other activities such as facilitating work permits, helping with on-ground logistics. And your local partners are your #1 point when it comes to being able to access the market. They help to identify new projects. They help to facilitate the project tenders. And key amongst them is also helping to negotiate contracts per the local standards or practices. Also, your local partners, in this case, helps for you to be able to get access to various platforms. Across the sub-region, local content authorities have platforms where projects are being published. So the local players are the ones who have these access to these platforms, and then they give, through these local partnerships, they help international players like yourselves to be able to know which project is up and which project is ready for tender. According to Rystad Energy, West Africa will account for about 50% of upstream capital expenditure on the continent. Investments in new discoveries will double from 2025 and continuously grow into 2030. Most of the capital expenses will be for deep water and onshore projects. The West Africa region will also account for about 16% of upstream project count in Middle East and Africa. Nigeria, Senegal, and Ghana will be leading for the sub-region. So when we look at West Africa in particular, the big four, namely Nigeria, Ghana, Senegal, and Cote d'Ivoire, will have the most oil and gas projects. The capex, or the capital expenditure for this project, will be borne by largely the national oil companies and the oil majors operating in the region. At this point, let's take a look at the big four. As mentioned earlier, the big four are Nigeria, Ghana, Cote d'Ivoire, and Senegal in this order. But Nigeria presents the largest opportunity in the sub-region. Nigeria is a matured market, oil and gas market. It has skilled and experienced workforce. There's strong local content regulations. And in some cases, there has been projects whereby about 90% of the man hours, especially in areas like construction and fabrication, have been done by the locals. Nigeria is also focused on developing gas as a transition fuel for their development. There's also strong participation of indigenous exploration and production companies in the country. Nigeria currently has the largest reserves of oil and gas for the sub-region, with about 200 TCF of gas and about 37.5 billion barrels of oil in reserves. Ghana, being the #2, actually is a major market when it comes to exploration and production enhancement. Ghana is facing a decline in terms of production, but in the coming year, they look to have FID and start implementing some projects that will boost production. And this is what presents opportunity for the sub-region. Ghana currently has about 13 blocks. About 3 of them are in production, 2 are pre-development, 2 under appraisal, and about 5 exploration contracts ongoing. Cote d'Ivoire is expected to have the highest growth in terms of oil production in West Africa by 2027. The market is small, it's matured, it's small but matured. It's been producing, Cote d'Ivoire has been producing oil since the 1980s. There are about 50 blocks and about 5 of them are in production. The key player in Cote d'Ivoire is Eni, who is developing the Baleine field, which we'll talk a bit more about later. And Cote d'Ivoire still has a lot of prospects when it comes to oil compared to gas. Moving on to Senegal. Senegal is actually the most promising new producer in the sub-region. This year, Senegal got first oil sometime around June from the Sangomar field, where production is expected to reach about 100,000 barrels per day. And first gas is also expected in the first quarter of 2025 from the GTA project. Let's take a look at Nigeria. In Nigeria, the indigenous players are stepping up and are expected to contribute up to about 70% of the country's production. Nigeria is targeting to have about 3 million barrels production in the next couple of years. Earlier this year, they hit 2 million barrels, which is a good sign towards their target. 3 key things are happening in Nigeria that is driving the indigenous companies' participation in the indigenous companies' contribution to the production in the country. These are that the oil majors in Nigeria are divesting from offshore to focus on deep offshore and the gas value chain. We've had events such as Eni selling off their exploration to or their onshore activities to Wando for about 800 million. Shell has done the same. ExxonMobil has done the same. Total Energies is also selling to another Mauritius-based company, Chapal Energies, for about 860 million. Also, the indigenous companies are taking over some of these, what we would call the marginal fields, and we see production also coming up greatly from that side. And as Nigeria is also developing the LNG as a transition fuel, we've seen key investments such as the NLNG 27, which is going on. It's a $10 billion investment. We've had the AKK pipeline, which is over 2.8 billion. We have the UTM FLNG, which is a 5 billion project, the Dangote Petrochemical plant. So these are a lot of projects that are happening and has a very active NOC and Nigerian participation. So from this graph from Wood Mackenzie, we can see how the Nigeria's participation, the indigenous participation is contributing to the overall production. Let's take a look at some of the projects in Nigeria. So Nigeria, as I had mentioned earlier, is the biggest market in terms of opportunities. Some of the key projects to look out for are the Shell Bonga North project, which is about a $5 billion project. FID is expected by Q1 2025. There is going to be developed over 3 EPC scopes. The first one is the FPSO works and new integration. There's going to be an extension of the subsea umbilicals, which is going to be worth about 500 million. And then there's going to be about 70 subsea production systems, which is going to be a turnkey package. We have the Ubeta upstream gas project as well, which is going to be led by NNPC and Total Energies. This project is estimated at about 550 million USD. This is one of the good cases of low emissions and low cost as they look to use a solar electrified drilling rig for this project. We also have the UTM offshore FLNG. Other activities by some of the locals is the first ENP and NNPC. So first ENP is first exploration and production, and then we're in partnership with the Nigerian National Company. oil company, which is NNPC, development of the Madu field. They did the FPSO Abigail Joseph in Singapore, which is currently producing about 20,000 barrels per day, and they're looking to ramp up production to about 60,000 barrels per day. The FPSO Abigail Joseph is one of the fastest works that the Keppel, those days Keppel, now Seatrom, and Yixin had done. They did from decommissioning of the FPSO and the redeployment, it took about 1 year from start to finish. Moving on to Ghana and looking at the opportunity, in Ghana, the key project that needs to come up is the Pecan field, and it's going to be the main thing that would determine Ghana's long-term oil production. The Pecan field is estimated at about 3.5 billion for the first and second phases of production, first and second phases of development, and then about 80,000 barrels in terms of production. The project, which is located about 115 kilometers offshore and about 2,400 water depth, would have about 7 wells and 7 water alternating gas injectors as well. It's going to be developed by FPSO and subsea production systems. At the moment, we understand that Ocean Yield's Dirubai FPSO may be used, and then Subsea 7, mainly the subsea umbilical riser and flow line, and OneSubsea may provide the subsea production systems. The development plan has been approved. We expect FID in 2025, and production should commence in 2028. This project has largely been delayed by COVID and other sensitivities that were in the market. Ghana is going into elections this year, so most projects are being held on pending the outcome of the elections, which is in about 2 weeks. So we expect most of the FIDs and key project announcements to happen either at the end of the year or towards the first quarter 2025. Other projects to look at in Ghana are the Springfield Afina development. Ghana has also spoken about the Ghana Petroleum Hub project, which they have signed a contract with the anchor investor for the $12 billion, and they've started some form of civil works at the project site. In terms of ongoing production opportunities that are in the country, we have the FPSO Kwame Nkrumah maintenance, which is expected to happen in Q1 2025. It will involve FPSO deck and hull repairs. There's also room for pre-shutdown supplies such as PPE, spool pieces, and the likes. There's also the 10-field FPSO JEA Mills fabric maintenance, which is also available. And then there's also fabric maintenance and asset integrity management opportunities for the John Agyekum Kufuor FPSO. Currently, we have the Jubilee field undergoing a 4D seismic survey. The contract has been awarded to Norway's Shearwater in partnership. So the local partner for this project is Dextra Energy. And this is to be able to provide 4D data to guide the next development phase of the Jubilee field when it comes to the work that is being done. For Ivory Coast or Cote d'Ivoire is becoming an oil and gas hotspot. The country expects a threefold oil output increase by 2027, and this would largely be driven by the Baleine field. So Cote d'Ivoire's oil production is expected to increase from about 30,000 barrels per day, which was recorded in August this year, to about 200,000 barrels per day in 2027. Now, this, if they get to 200,000 barrels per day by 2027, is going to bring a lot of changes in the Big Four, as in the order of the Big Four, because then they will take out Ghana being the second largest producer to become the second largest producer. For now, the Baleine field, the phase 1 has been completed, producing about 22,000 barrels per day via the Fires FPSO. The phase 2 has just been completed at this month in November, and it's expected to start production by the first week of December via the cylindrical Voyager Spirit FPSO, which is actually the first cylindrical FPSO that we have in Africa. So the Baleine Field Phase 2 is being developed via an FPSO and an FSO. The Phase 3, which is expected to commence or next year, or have the FID first quarter next year, and also development continue later part in the year, is about 70 kilometers offshore and about 1,200 meters water depth. It's expected to, the Phase 3 is expected to boost the production from the Baleine field alone to about 150,000 barrels per day and about 200 million standard cubic feet of gas per day. Other opportunities in Cote d'Ivoire includes the ENI's Murène 1 discovery, which is located in the Kalau field. It's estimated the development of this project is expected to be about 2.74 billion. The other, in terms of current production opportunities in the country, we have the Baobab FPSO to go offline for repairs and maintenance upgrade. It's expected to return in 2026. We understand that the FPSO, these repairs may be done in the Middle East, at the Dubai, in Dubai in particular. Now, beyond these, the Ivorian market has become very attractive due to the discoveries that I had mentioned earlier, the Baleine and then the Murène from the Kalau field. And it's attracting a lot more rush for exploration licenses in the country. We have ENI at the moment having interest in about 6 blocks. Murphy Oil has just come in to take about 5 licenses. Shell has expressed interest in about 3, and Vaalco Energy, through an acquisition, has taken a major stake in the Baobab field, which will be undergoing maintenance very soon. Taking a look at Senegal, Senegal is a mix of production opportunities and exploration and development opportunities. Currently, as I mentioned earlier, we have the Sangomar field, which has entered into production, which I'm sure our panelists will be able to share more light on. And then the GTA is expecting first gas from Q1 2025. So it presents a lot of opportunities when it comes to production support services and supplies. From the market on engagement with players, we understand there's a need for about support vessels. Across the sub-region, we've had requests or interest in about 11 vessels offshore that has reached the office. There's also demand for spares and equipment supplies. We see maintenance and repairs contracts also coming up, one of which we have one of our Singapore companies already signed for one of the projects in Senegal. There's also production enhancement opportunities in there for both the Sangomar and then the GTA project. Beyond this, as the first phases of this project have been implemented, there's also opportunity for further downstream infrastructure development, like Senegal looking to develop a 250 megawatt gas plant, which would be using domestic gas from the field. So there's also the gas pipeline construction, which are other opportunities to look at. In terms of exploration and the opportunity, exploration and development opportunities, we have the Yaka Teranga, which was being led by Cosmos and BP. BP pulled out, but we understand that Petrosen and Cosmos are keen to develop this project. At the recent Africa Energy Week, this project came up, and Petrosen had indicated that they're looking to develop this project starting next year. So it's expected to be a 2-phase development, estimated budget of about 9 billion. The reserves for Yaka Teranga is about 25 TCF, and production at full capacity is expected to be about 630 million standard cubic feet of gas per day, and up to 24 subsea wells for this project. Senegal has also opportunities for about 17 blocks that are available for exploration. So this is more of a development opportunity. And also we have another, what I call the phase 2 project opportunities. Sangomar and GTA, which are already, I would loosely say, in production. also have the second phase of opportunities that it presents, which is the Sangomar Phase 2 and the GTA Phase 2. So looking at the whole West African sub-region, there's a whole lot of opportunities. So far, the presentation has focused a lot more towards the exploration and the development opportunities, as we haven't spoken so much about the production opportunities. But this is not to say that there are no production opportunities. There are several of them, especially in markets like Nigeria. We get in requests for various supplies, various support services each and every day. However, from this slide on projects across the sub-region, key things to highlight include projects like the Bilala, which is in Mauritania, is an 80 TCF field, and we expect FID sometime in next year. We also have the Banda field, which is also in Mauritania, and we expect FID to happen very soon. So at this point, I'll take a pause and say thank you for listening to me, and then we move on into the panel discussion. Can I have my panelists turn on their videos? Okay, so before we start the panel session, if you have any questions, please do use the Q&A function and let us know. So I would start by introducing Folake first. So Folake.
Okay. I am Folake Elias Adeboale. I am a partner. I've been with the law firm of Udo Doman Bello Sage for 28 years and a bit now. I lead the oil and gas practice at the firm, and I co-head mergers and acquisitions and private equity and venture capital at the firm as well. We've been privileged to work with diverse clients across the oil and gas value chain. We also have a very robust energy, power projects and infrastructure practice that is headed by two others of my partners. There are 15 partners in the firm. We advise on everything, domestic and cross-border transactions. We help with joint ventures, strategic alliances, local content, and other kinds of regulatory compliance. Our clients include some of the people that Clement has referred to this morning. We're privileged. We've advised a lot of foreign state-owned entities, foreign contractors, foreign oil field service businesses. I think that it's fair to say that we're almost 40 years old as a firm, and I would say about 70% at a minimum of our clients are usually foreign. So we're especially excited to be here, and we thank Enterprise Singapore for the opportunity to join this great panel of people. Thank you.
Thank you, Folake. Joy?
Hello, hi, good morning, everyone. So my full name, that's John Clements Watson. I'm Ghanaian. So I'm a senior sales operations manager of Baker Hughes. And typically I will cover the subsea production and services business for the company, specifically for Sub-Saharan Africa. So my remit covers all of Sub-Saharan Africa, aside Angola and Nigeria. So the countries that keep me busy, I'm sure Clement had mentioned most of them. You'd have Ghana. I sit in Ghana at the moment in Accra, sunny, beautiful Accra. I also cover Cote d'Ivoire, I cover Senegal, I cover Equatorial Guinea, and these are the main countries that actually would be keeping me busy at the moment. So specifically for the subsea services business, started out in the company. I'm about 15 years within Baker Hughes, so covering from the field engineering applications, product engineering applications. Moved on to sales, business development, covering East and South Western Africa, and mostly for completions, and then moved on more so to the subsea side of the business. So looking at your subsea infrastructures. So most of the projects that we've been involved in, or I've been involved in, cover the aftermarket services for subsea structures. We do a lot of work with the IOCs, with big projects, already covering the countries that I had mentioned, Ghana, Cote d'Ivoire, as well as EG, which are the main countries. And at the moment, there's a lot that Clement has discussed, and I'm eager to obviously advise, given the experience that we have. Some engagements have been had with some of the companies within Singapore. I think it's a very good opportunity for us to discuss the dynamics, especially in West Africa, where it has come to pre-COVID up until now and where it's heading towards. So thank you for the opportunity, Clement, in the Enterprise Singapore.
Thank you, John. Bernard?
Yeah. Hi, everyone. Thanks for inviting me. It's an honor to be part of this panel. I'm Bernard Khan, the supply chain manager for MODEC Senegal. As you know, Senegal just discovered oil and gas, and we start in July producing and exporting oil. And this is a good opportunity for Senegal. When it comes to my role within MODEC, I'm in charge of the supply chain, and I'm in relationship with the vendors. And what I notice is that there's an opportunity to link with international partners to level up and reach standards. We do it, regionally with some African region, countries, Ghana, Congo, Gabon, but we do it also with other international countries. So it will be a pleasure to partnership with new international partners. What I want to say is that MODEC, we are in Senegal, but within West Africa region, we are also in Cote d'Ivoire and in Ghana, and there's some collaborative projects which we are participating. Also, thanks. It's a real pleasure. It's a good pleasure for me to participate.
Thank you, ladies and gentlemen, for the brief introduction about yourselves. Delving into the questions, I've done some of the presentation, have spoken about some of the opportunities in the sub-region. However, I would be grateful if you could also share some of the key projects that you know of in the sub-region. It could be upcoming, it could be current ongoing projects, it could be projects that you just got a wind of. Just let us know.
Okay.
Malaki, you want to take this first?
Sure, I will. You mentioned some of the divestments, and they're huge, and to be honest, feature quite prominently on our current sort of work in our current work streams. We've been advising Seplat PLC on its acquisition of the onshore assets of ExxonMobil, which are held through Mobil Producing Nigeria Unlimited. That process received regulatory approval on the 20th of October, and there are steps being taken towards final transaction closing. As you may know, Seplat is a dual listed company. It's listed on the London Stock Exchange and on the Nigerian Stock Exchange. And this is the agreement, the starting value of the agreement, though it's subject to adjustments, is about 1.3 billion. That's one of the ongoing projects we've been involved in. There are other divestments that are also in the market. You mentioned Oando's acquisition of EAI, which received regulatory approval a little bit earlier in August 2024. Others are Shell's planned divestment, which is valued at $2.4 billion, to a consortium named Renaissance, but that is going through some regulatory hurdles. And there is also Total Energies' agreement to sell 10% of its stake in Shell, a Shell joint venture, to Chapal Energies. You mentioned that, and I think the value for that is about $860 million. So beyond the divestments, I mean, the divestments themselves are very interesting in terms of the kind of opportunities that I think they're going to present for Singaporean companies. I was privileged to meet some of you when I sat on a similar panel in Singapore a few years ago. And from my understanding of the audience demographics, these divestments are going to offer lots of significant opportunities, for instance, for engineering, procurement, and construction EPC services, where they're looking to develop and maintain infrastructure, maintenance, process optimization, technological integration. Singaporean companies are known for their proficiency in large and small scale projects. And I think that the divestments are going to bring those opportunities significantly. There's also technical assistance that will be required to optimize production and operational efficiency. So specialized services in maintenance, process optimization, and technological integration will again be valuable. I'm sure we're going to circle back to talk about local content later. But what Singaporean contractors will be bringing to the table is offering training programs, capacity building, and so on. Supply chain logistics, environmental management, and compliance, lots of opportunity there. I was privileged to attend a luncheon with your Singaporean Foreign Affairs Minister yesterday afternoon in Lagos, and I got to speaking with some of the Singaporean companies who are already established them here, one or two of whom are involved in some of the most exciting opportunities for next year. So those the special advisor on energy to our president, she mentioned how under the regime, they've unlocked over $1 billion worth of investment in the oil and gas value chain in Nigeria, and stated that the expectation is to see final investment decisions on at least 2 new multi-billion-dollar projects in 2025. There's also been recently a clear set of fiscal incentives that are being offered to stimulate participation and investment in areas such as non-associated gas, deep water, which we've already mentioned, offshore oil and gas exploration and production, e-mobility, and clean cooking. There's we have the Dangote refinery, which is making progress towards full operational status. Dangote has signed a 10-year gas deal with the Nigerian State Oil Company. And we also have 29 oil blocks that are up for sale that have been offered for sale by the Nigerian Petroleum Regulator. 29 of those blocks are upstream, and they're all upstream. 29 of those blocks are available in the licensing bid round. And there's also 7 deep offshore blocks that are separately available in that process. That process is due to conclude on 29th of November, next week. And they will also offer lots of significant opportunities along the lines that I had mentioned for participation by Singaporean contractors and subcontractors who are looking to provide services.
Thank you, Folake. That's a whole big basket of projects and opportunities. John, would you like to also share about some projects that you know in the sub-region, current and upcoming projects alike?
Certainly. I think you did a great job, Clement, touching a lot of the projects that are currently ongoing. And I'll start off with Ghana. Ghana specifically, you had mentioned Pecan. Yes, we have that going on. Currently, the prospects of Pecan, as you had seen, I think in your presentation, you're looking at FID sometime in 2025. And the current climate, obviously, in Ghana, obviously, with the way the market trends go, it's very much dependent on how things are going with respect to approvals. Election year at the moment, in the next couple of weeks, as you had mentioned. So most likely Q1 2025 into the first half of 2025 is what we're looking at least for FID for Pecan, for the Pecan field specifically for Ghana. For Ghana, this would actually bring in the third producing field, aside what you've been looking at for Jubilee 10 and then the OCTP field for ENI. So it's a big one for Ghana. Everybody's looking towards or forward towards to that. There had been a bit of a lull in terms of production, in terms of operations. There's a production decline. However, you're seeing definitely an uptick from 2025 onwards, with other players also being pushed by the regulatory bodies to meet their obligations on the licenses. So because you're going to definitely have a shift in terms of regulatory bodies or whichever government is coming, you're going to see much more activity, much more injection of energy into making sure that the licenses and fields which were kind of dormant are brought into production. Now, I just want to take a step back and give you a sort of a feel of West Africa. And I think, Clement, there was a bit of it that we also need to appreciate. When you look at Africa in totality, from where I sit in terms of sales operations and BD, you're looking at a significant amount of investments being pushed into exploration for West Africa as compared to Africa. You should see around $6 billion of that in terms of investments. And we should soon be seeing back to pre-COVID levels from next year onwards, which is significant, right? It's taken us about 5 years to get back to those pre-COVID levels, which is very good. Now, in terms of the volumes, West Africa actually accounts for about 45% of those volumes, right, that you're looking at in Africa. So quite significant, almost around 760 billion barrels of oil equivalent that's discovered in West Africa just for the year, the 2023-2024 period. So there's a lot going on. There's immense opportunities here for us as a service company, something that we look forward to. When you have an increase in rig count, obviously there's an uptick in activity. Now, so that's Ghana. Moving on from Ghana to Cote d'Ivoire, you had mentioned Cote d'Ivoire as one of the big four, and it has kind of stolen the limelight for this year, specifically around the discoveries with Baleine and also one of the new discoveries around Kalau. So for phase 3, it's a big project that everybody's looking forward to for Cote d'Ivoire. Very exciting times for Cote d'Ivoire. Cote d'Ivoire as a country in its own had also seen a bit of a lull in terms of activity. But all of a sudden, you've seen the big players like ENI that has made such a huge, bold move and sort of expanded the territory and has now the limelight. You have a lot of other players that are also going in and trying to also make moves into Cote d'Ivoire. You have Murphy, that you had already mentioned in some of the oil blocks in there. What as a service companies are also doing is trying to see what kind of investments we can be making ahead of time to position ourselves to support the efforts of hydrocarbon production. And I think for the enterprises, Singaporean groups and companies that are looking to go in, Cote d'Ivoire is a very open and prospective location for those looking to do new business. It's the government and the regulatory bodies are very open to partnerships, very open to local companies and joint ventures. So it's a very good opportunity there, even as Folake had mentioned even for Nigeria. Equatorial Guinea is another location that is key. You have companies like Chevron and the others trying to make some headways and some wins in there as well. For Senegal, Yakar Teranga, you had mentioned that, Clement, is a big one with huge prospects. You had between 2019 till now, Cosmos on the Orca discovery being the biggest in terms of gas discoveries. Now, obviously, there are lots of off-takers looking at that. how quickly they can go to FID, how quickly they can get feed underway, and how quickly they can turn this around. As you already know, there's a huge gas demand market out there for gas as a transition fuel. So for us as service companies, we are trying to position ourselves in these locations. We are present in most of these locations to see how we can best support.
Thank you, John. Bernard, what are some of the opportunities in your area that you see?
Yeah. There's a project you do not mention. It's in the south region of Senegal. Previously, this was owned by Nexen, a Canadian company, sold to a Chinese one. It's between us and Guinea-Bissau. So this project, I know that there's a month ago, there was some exploration. And I know that in January next year, there will be another, they will be digging also 2 others well. It's the former Sinop project. So this, they are looking for a partner to develop this project. The Yakar Teranga, I know that Cosmos is on it, but they are looking for a partner to develop also. And when it comes to activity related to this, there's a shipyard, because all those FPSO, they are built in China or in Singapore, in the shipyard. And in Senegal, they are launching an RFQ for the shipyard, the local shipyard there. And this could be an opportunity, as lot of vessels will be chartered and on the 2 projects, Sangomar and GTA. It will be an opportunity for Singaporean companies to bid, to have local partner and to bid for this shipyard. This could be important. Within Senegal, there's any, if you want to do the Bosiyet, you need to go out in Singapore, in Las Palmas, in Ghana. So we need a training center where we could perform Bosiyet Opito certified. And there's a lack when it comes to oil spill response. And those 2, I mean, the training center for Opito Bosiyet and the oil spill response could be extended to within the MSGBC region. I mean, Mauritania, the 2 Guinea, Gambia, and Senegal, because there's a need. And I know that some Singaporean companies were interested on this, and this is really a need for oil and gas sectors. And maintenance and welding, because there's a challenge in terms of integrity of the vessel of the FPSO, and there's a need of certified welders and inspection in terms of integrity inspection for subsea equipment. So these are the opportunity Singaporean vendors or Singaporean partners could come and have a look at. Okay.
Thank you, Bernard. So I do get it for Bosiyet, Opito training, the oil spill response, and subsea integrity inspection. Beyond this, let's say around MODEC, when it comes to your production specific, what are some of the opportunities that you see for Senegal?
For me, that directly what we need now is that the vessel, there's a need for the vessel, support vessel, tugboat vessel. This is one thing. And another thing is that so far we only have 1 shoppers company, and to mitigate the risk, it's important to have at least 2. And for me, clearly there's a room for vendors or investors to come and provide these services, because so far we have only 1 one company providing these services, these chopper services, and it's not enough.
Okay. What are there demand for spares, other kind of equipment of that nature?
Yeah. When it comes to spares, for me, so far we are taking spares from Aberdeen. A lot of I know that Singaporean companies offers a large range of spares and models, but there's a challenge, and I'm sure that they could overcome it. It's about the distance between West Africa region, particularly Senegal and Singapore. So they need to have a strong and performant supply chain to bring spares in a comparative price or cost.
Okay, thank you, Bernard. So moving on, John. I do note that for a player like Baker Hughes, most of your projects you would source within your own network. But where would you typically be getting your, let's say, equipment from, let's say, in terms of geography? Is it Asia, is it Europe, for the projects that you do in the sub-region?
Okay, so I can speak to a lot of our subsea projects and maybe a bit of more so on the completion side. A lot of what we do would have to do with, let's say, controls when you're looking at wellheads, subsea equipment in terms of the trees, flanges, etc. So it's various components. It depends on what you're looking at. I'll touch on wellheads, for example. Typically, some of these are manufactured in-house. We do have our manufacturing facilities, obviously, in Batam, which is not new. It's been done for a while. We also have it in Montrose in the UK. But specifically with some of the projects that we would have in country, most of the equipment is manufactured out and brought in to support the industry and installed. However, there is a need for specific repair works that would need to be done. And one of the challenges that we face as service companies is mostly around maintenance and the lead time between when you want to turn things around. So if we have to secure any spares, if we have to secure any kind of repair works, we may have to sometimes ship some of the equipment back to these locations, be it in Asia, be it with respect to in the UK, or sometimes in Norway to do certain kinds of work, and it's being brought back down. If we did have some of these repair modification centers stationed within the hubs, whether it's in West Africa, so that we could have these quick turnarounds when it comes to repair works. But sometimes these are needed in very, very short turnarounds. So that's an opportunity there where you would have some form of a low-level machine shop, high-level machine shops, certain kind of repair works around thread cutting, spare supply would help us and help those projects in quick turnaround. So that's an opportunity right there.
Okay. I do believe that in your scope of work, you would also be giving some subcontracts to local companies. What are some of the key factors that you consider for such subcontracts?
Okay, so when it comes to some of those subcontracts, it's multifold. So you initially have the local content regulations, which you would need to understand and follow. Part of which would say, okay, there are certain parts, procurement services that are earmarked for local companies, and there are some which are not. So we'd have to take that into account in terms of the local content regulations. Other subcontracts that we would need to look at is speed, how quickly we can turn things around from when we are given the request, from an inquiry to order, down to when you can execute. So that's one thing. So sometimes it's quite important that there is some sort of a presence, be it through the main presence of the company or through some sort of local partnerships to be able to do that. So that's what we look out for. So those are the big things. Our customers are looking for speed, they are looking for quick turnarounds, and they are looking for available support, right? So as long as we can assure these things on the ground, right, we'll be looking at these things mostly for our subcontractors.
Thanks, John. Falake, John had spoken about the local content, and I know you have been advising various players in this regard. How, I mean, if you could expand a bit more on local content. I know Nigeria is a big player when it comes to local content in Africa. If you can expand a bit more about it, and how you, I mean, as an organization, UUBO, you are able to support companies that are looking to, how to structure the agreement and how looking to come into Nigeria or come into the sub-region for partnerships.
Thank you. So I enjoyed the comment that was made by a CEO of one of the Singaporean companies at the lunch I spoke about that I attended yesterday with the foreign minister. He said Nigeria is one of the best kept secrets in the business world. As I was very pleased that in your presentation, you mentioned that there have been Singaporean companies that have been actively involved, for instance, in security measures and similar in the South in Nigeria. Now, local content sometimes is perceived to be a prescription that says that unless you're a Nigerian company, you can't do business in Nigeria. Certainly not the case. What it impacts on is your eligibility when, for instance, you're bidding for the award of a contract, let's say an international oil company that's selecting operators or contractors, or any of those people is looking for people to provide services. The general philosophy of the legislation is to increase, and in some cases, to make exclusive Nigerian participation in the Nigerian oil and gas industry. But there's an acknowledgement that, there's a lot of technical and financial capacity that's still required. There's still a huge appetite for that in the market. So what the Act does, it prescribes different levels of what they call Nigerian content prescriptions that are required in order to be given first or exclusive consideration awards, depending on the type of service that you are providing. So those minimum Nigerian content prescriptions that companies awarding contracts are required to be guided by are based on things like perhaps the number of Nigerian man hours that will be involved in the project, their size, tonnage, the volume of certain goods, the level of certification of the service provider, and the percentage that you are allocating for spending on procurement of local goods and services. So it's a mix, and it will vary depending on the kind of activity that each contractor is providing. The Nigerian Content Development and Monitoring Board is the sector regulator. It has prescribed a whole host of regulations to guide participation in the sector. And it reviews everything from the initial adverts, inviting bidders to tender. It will look at the awards process. What it wants to see is that companies that have a minimum of 50% plus 51% Nigerian participation are given, it's preferential consideration is what I would call it. So in most instances, our work relates to helping foreign contractors, foreign exploration and production companies, service providers who are looking to do business in Nigeria structure the manner in which they do so. If you're one of those companies, there are at least two things you need to do, and some of them were mentioned earlier very eloquently. I would begin, of course, by saying get the right advice, not just in terms of the law, obviously tax, financial, and so on, but very, very important to get the right legal advice. The good advice that was provided earlier was about choosing the right partner. That's crucial. And that informs the work that we do, which is helping companies to set up to do business in Nigeria. There are instances in which Nigerian company law will say, if you're doing business on an ongoing basis, you may be required to establish a company in Nigeria. We help with business establishment, getting licenses from sector regulators, tax advice, all of that. And then we help with the contracts, your joint venture, strategic alliance contracts. And some of the things that we do is ensuring that for, especially where the foreign participant is bringing significant technical or financial capacity to the table, helping you navigate so that you ensure that you are adequately compensated for what you're doing and adequately protected, even though you're having to partner with locals in order to execute contracts or to be at the top level of those that are eligible to execute contracts. So that I think in summary is what we do.
Thanks, Folake. John, Bernard, you want to add anything on the local content bit? I mean, how do you also deal with the local content regulations when it comes to your side?
Okay. Oh, please go ahead. Go ahead.
No, thank you, Bernard. So, let me touch on Ghana, for example. So, yes, with Ghana, I started out with the legislative instrument LI 2204 as far back as in the early 2010s or so, but has been amended along the line because of obviously the evolution and the way they have seen the landscape in terms of the partnership that would be required to kind of boost what we need to do or get that kind of participation that we need from the international companies and also the local companies. So initially, the initial LI 2204 for Ghana specifically called out specific sectors that were the kind of partnerships that would have 10% ownership in terms of a JV partner. To be able to do business in Ghana, you have to have been registered as a JV to do business in the upstream sector. What then transpired along the years is we saw an amendment sometime in 2021, 2022 to say that, okay, aside that, you can have certain strategic alliances or channel partnerships beyond that. So that gives another opportunity or leg room for partners or companies that are outside of that to kind of play. They don't necessarily have to be set up, but you can have those channel partnerships. And as my fellow panelists had said, for Folake, you have to obviously have that kind of guidance into the kind of partnerships that you're looking at, be it with strategic alliances, be it with channel partnerships, to see what best suits you. The local content guidelines are obviously has its benefits in terms of seeing how you could then participate within the industries, within the different countries. However, as a service companies in partnering or having subcontractors would definitely need to comply by those. In doing that as well, the advantage of having that local content laws or regulations in which you need to abide by is, and I think like I had mentioned, is that whilst in depending on the project and depending on your establishment, if, for example, you are just a startup, there are certain sort of criteria that you should meet, whether be it engineering hours, whether be it in terms of feed steady, and in some cases, even manufacturing capabilities. So it also spells out that if you're within the business for, let's say, a period of 5 years, you may be looking at, let's say, 50% of manufacturing capacity. If you're 10 years within Ghana, you should be looking at 70% manufacturing capacity. Now, what this means is that a company that has been set up here needs to be able to do or show that amount of capacity in country. So obviously with the Singaporean companies that have big prowess when it comes to manufacturing, we're able to leverage those strengths. And with that capacity of looking at manufacturing, etc., we can maybe with those JV partnerships, with those channel partnerships, with those strategic alliances, meet those targets. So those local content regulations also presents an advantage for business opportunities for enterprises such as yours.
Thanks, John. Bernard, and then we can go to the Q&As.
Yeah, when it comes to local content, for me, it's a good thing for both sides, because it's promoting vendors to have access to market, and also to structure the partnership that they could have with international partner. And when it comes to Modex, roughly we were dealing with 150 contracts, but it was correct. It was correct as the local have their parts and international have their parts. But for me, the next step will be this local content law need to be reviewed after 3 years of after discovering and after 3 years of local content setup. We need to sit again and review. Okay, these activities should be done by local exclusively. So let's give it to them. In this other one, they really need partnership support from international vendors, and we better structure it. And my feeling is that we need to sit at least twice a year with international vendors and international partners and get feedbacks from them when it comes to the local content. What could be improved, in what field they feel that they could better support, or how they think about the partnership. I know that there is not so much constraints, because international companies are not obliged to set up a business or to set up a joint venture, but they could go with a simple protocol or simple convention could be enough. For me, it will be about sitting again, reviewing the law. But so far, the local content law in Senegal is good. And the reporting we are doing also is good, because after every year, we sit and saying the guys, okay, this was what you promised, this was what you forecast, this is what you really achieve. So from there, what will be the next step? This is my view and my experience when it comes to local content law.
Thanks a lot, Bernard. In the interest of time, let's move on to the Q&A. The first question is from Mo Zaki, and he's asking, are there any potential upstream opportunities for onshore in the sub-region? John, you want to take this? Onshore opportunities for the sub-region?
Yes, so I'll touch on a few of the countries that we've discussed so far. So for Ghana, for example, Ghana is aggressively looking at opening up and going through an exploration undertaking for its Voltairean Basin. The Voltairean Basin is predominantly unexplored, and from 2025 onwards, from next year onwards, it actually was supposed to go through 2 wells being drilled in that exploration, in that Voltairean Basin this year. However, that did not take place. However, the national oil company, GNPC, is very aggressive in trying to explore that Voltairean Basin, and from 2025 onwards will present some opportunities there. So that's one in terms of the onshore activity. For Cote d'Ivoire, typically for West Africa, a lot of the exploration efforts and funding that has happened over the past years have more so been around subsea, right? I'll attest to that. However, it doesn't go to show that with the onshore capabilities, they're not looking at developing further their onshore acreages, okay? When you look further into Gabon, Congo, and the others, these are mature sort of countries. There is a lot of work going there with customers like Perenco doing a lot, Trident OGX that are trying to do a lot more drilling. And so for the onshore acreages, you could be looking at Congo, Gabon, for those parts of Africa. But specifically for West Africa, you're looking more at subsea. For Equatorial Guinea as well, you're looking more at more shallow water acreages that are more so around Cosmos and the others. But what we have seen mostly on the onshore part of the business is a lot of the national oil companies have realized that in order for them to play a bigger role and have a better share in the stake, and as you'd see in what you had shown in your slides for Nigeria, and I would say for the region, the big four are all looking towards Nigeria. So we're all following the trajectory of Nigeria. Nigeria is how many decades ahead of all of the other countries. So whatever is happening in Nigeria today, undoubtedly will most likely happen in the next 2 decades with or so with the other countries. So you can see that there's a growing shift. There's a growing shift to developing the onshore assets. So we should be seeing that soon with Ghana. We should be seeing that soon with Cote d'Ivoire and Egypt, but mostly it's around Nigeria. I can't necessarily speak about to Nigeria, but I'm sure for like my other colleagues will be able to speak more on that, which you've also shared, Clement. But this is what we're looking at for most of the onshore acreages in Ghana.
Thanks, John. Folake, in just about 1 minute, if you can share about the onshore opportunities in Nigeria.
Yes, I think I'd already spoken on them before, so I'll just summarize. EPC services, lots of scope there for maintenance of infrastructure, technical and operational support for optimizing production and operational efficiency. There's opportunities in supply chain and logistics because the transition of the assets as part of the divestments will require that kind of support. Addressing environmental concerns is huge. It's one of the drivers for the divestments. So the acquirers of the assets are going to need Singaporean companies with experience in environmental management, for instance, to assist with those processes. I think that those are the key ones, as well as generally the technical and operational support that they will continue to need once the divestments are completed, as well as field development and asset management services.
Thank you. So Nigeria, a lot of onshore opportunities for Mohammed Mozaki. Zaki, his company actually does some of these wellheads and stuff, so I'm sure that's the area of interest. So Zaki, it's more of a transition period. Let us finish the divestment, and then the field and technical activities will commence. So next year, we can look at some of these opportunities. The second question is from Dan, and he's asking, for downstream operations such as the refineries, what are some of the services that Africa is lacking at the moment or looking for? So downstream operations such as refineries, what are some of the services that Africa is lacking at the moment or looking for? This is free. Any of you want to take it up?
Okay, let me take that up. Look, I know Singapore, when it comes to refinery, excellent capabilities and capacities. Look, one main thing is around manufacturing, as I had mentioned, right? Even if the modifications that you're looking at, that's one big aspect. Quick turnaround of equipment, repairs, modifications, technical support in terms of leveraging any process engineers, especially when these modifications are needed tweaks, that's when you'd actually need to have some subject matter experts come down and provide a sort of a technical assistance. The other part of it around refining is also around even labs, a capability of labs to be able to perform specific, specialized capabilities is what you'd be looking at. So when it comes to refineries, this would be kind of the main sort of mainstays that you'd be looking at. I had the opportunity to do a bit of work in my previous roles with the refinery, but what we typically not have that sort of capacity or capability is around modifications.
Thanks, John. Anyone wants to add on? Else we go to the next question.
Just to say that also there'll be support needed for building the network, storage, tanks, just the infrastructure. Those sorts of services, I believe, would also be required, as well as the maintenance and other services that John has also already described.
Sure, and I will also add on, in this case, for instance, in Ghana, what we see a lot more towards the downstream is what I would usually put as digitalization. So we've seen a lot more of smart metering, more like smart monitoring systems being required. In Ghana, it's almost a standard now that all tank farms would have that kind of systems in place to be able to tell real time how much product is happening. So in Ghana, the whole value chain from the refinery, from the port of discharge to the final drop of fuel in the oil tank at the petrol filling station is being monitored real time. So this is what we see: pipeline monitoring, a lot more of digitalization, a lot more of data to be able to help with forecasts for the sub-region. The next question is from Sebastian, and he asks, are there any potential opportunities for procurement, for project procurement? And what are the major international brands and categories that are sourced in Africa? I take it again, any potential for project procurement, and what are the major international brands and categories that are sold in Africa? Bernard, I think you take this first.
Clément.
Yes, Bernard.
Please, could you please come again? I don't get this question.
So he's asking if there are any potential opportunities for project procurement in the sub-region. And he's also asking, what are the major international brands that you typically procure from?
Okay. So when it for Senegal, for Sangomar project, I know that there will be in next year there will be an RFQ for spares, for spare project products, and it will be for IMPA products. There will be a big RFQ for the maintenance of the FPSO, and it will be mainly for IMPA products when it comes to procurement. And I know that GTA will start operating, and there will be a project down there also with BP project.
Okay, thanks, Bernard. Folake, do you know of any procurements?
We've actually evolved in this, and I think it's very useful. There's a platform called the Nigerian Petroleum Exchange that has a constant stream of available opportunities for procurement and the provision of other services that are described there. It includes details such as the pre-qualification processes. The various brands who are advertising for those services are also featured there. So you would have all of the usual IOCs like Shell, Chevron, ExxonMobil, Total, ENI. They're all Oando, you know, all of the opportunities are advertised there. So there's the idea is that you're having transparent and efficient procurement transactions. So even details about how you register as a supplier, what the current tender opportunities are, and the pre-qualification steps are all displayed on the platform. It's called NIPEX, Nigerian Petroleum Exchange, and it's available online.
Okay, thanks, Folake. John, you want to add on procurement opportunities?
Yeah, let's add on, and it depends on the project and what exactly you're looking out for. So maybe for completions, when you're talking about subsurface completions, the typical third-party items that you typically be looking for, which are quite voluminous, you'll be looking at your hydraulic lines. If that's something that you're into, that's one aspect of it, TEC lines. And then also around base chemicals, right? This is something that is always being sorted out for in terms of whether it's for drilling fluids or for specialty chemicals in terms of mixing. These are some of the opportunities. For subsea, when you're talking about spares, and this will typically remain around installation and commissioning spares, installation and completion spares or commissioning spares. So for hydraulic power units, that's one thing. Also PLC spares, that's also another. So this will typically be replenished sort of every couple of years or so, and master control station spares, electric power unit spares as well. So spares is one big thing. Obviously, for some of these projects, you look at these being replenished, as I mentioned, every couple of years. If you're looking at some sort of infrastructure-led campaigns or bringing on new projects, you'd be looking at this as well.
Okay, thanks so much, John, Bernard, and Folake. Our time is up, but I would give each one of you 1 minute of final words. You can use that to share about the outlook for the upstream industry in the sub-region. Ladies first, so Folake, you first.
I think we're very or should I say we're cautiously optimistic about the outlook for oil and gas in Nigeria in 2025. And I see, the more I speak to contractors who are already here, we had a meeting last Tuesday with the Central Bank of Nigeria governor to sort of talk about the impact of the current policies on investment and foreign participation in Nigeria. And we're optimistic. There's a lot of opportunity, given the matters we've already spoken about, the kinds of projects, the bid rounds, the divestments, the focus on gas commercialization and development, in security, there's a huge scope for opportunities. And I think savvy investors and contractors are engaging and finding out that what is available at the moment. Should anybody require sort of specific high-level early information, we're more than happy to provide it. Even if you want a high-level view of, look, what will I need to do if I want to provide services to X in the Nigerian petroleum sector or outside it, we're more than happy to provide that, and the clock won't start running immediately. We're happy to help with preliminary inquiries, so please do feel free to reach out.
Thank you, Folake. Bernard, final words or outlook in the industry?
My pleasure again to participate. And what I want to say is that from now on to 2028, a lot of projects will be developed, and we need a partnership to scale up, and for offshore project, but onshore project, I can give much more insight regarding when it comes to the project, but partnership that could support us. We we really need that. So Singaporean companies are most welcome, and also companies, regional companies from Nigeria, from Ghana, and yeah, we really want to develop partnership that will help us. Okay, my pleasure to be there with Folake and John.
Thank you, Bernard. So
thank you.
Okay. John.
So myself, look, I'm very excited from where I sit. I'm really excited about the outlook for West Africa in particular. I mean, that's the reason why I'm in my job, because we're out there looking for those opportunities. And when those opportunities are there and there's an uptick in activity, you can tell from my smile, it's a good thing. It's a good thing for us all. The good thing about it is we're seeing growth, and that's what's very important. You can tell, and I'm comparing it to, let's say, the Southern Africa, where you've seen such a huge, the news around Namibia. What West Africa has realized is that there is demand out there, there is competition with the different regions and in the countries. So if you're not putting yourself out there and marketing your assets or what you have in country in terms of even your regulatory, your fiscal regimes, you're going to be left out. So the opportunities that we see are getting better and better in terms of investments. They are making it more palatable for and trying to attract investments. Recently, there was an announcement around Africa Oil Week being moved to Accra. So it's good news. It's an indicator of the investments and then the hunger that the region is looking out for. So I'll employ and I'll encourage us all to take advantage of those relationships, to build those relationships, to take advantage of those local content laws, which are also in place, which, as Bernard and Folake had mentioned, is actually a win-win approach. It's a win-win platform for us to both collaborate and build those relationships. So thank you once again for the opportunity. And for us as a service companies, we're always looking for opportunities to partner and to grow our businesses. Thank you.
Thank you, Folake. Thank you, Bernard. Thank you, John. Very grateful for your insights. And this discussion has been very insightful for myself, and also, I believe, very fruitful for the attendees. We have a couple of polls that we want to pull out to seek the attendees' opinion. We plan to have an oil and gas mission sometime next year to West Africa. So please, attendees, please let us know your interest if you would like to participate in our oil and gas mission next year. We are targeting April, possibly on the 21st. Okay. I hope we have enough responses for the polls. Okay, so we can, if there's a second poll, let's launch it. But in the meantime, would like to say thank you. Thank you to the panelists. Thank you to attendees for being with us. We are grateful to my colleagues in the HQ as well. We are very grateful. I trust that post this session, please feel free to reach out to any of us. If you want to be connected to any of the panelists, we'll be happy to do that introduction as well. Let us know your thoughts about this webinar as well. And yes, till we meet again, whether virtually or physical, we say thank you. And as John had mentioned, Accra is always, and West Africa is always warm, sunny. It's always summer here. So that's, thank you.
Thank you. Thank you all.
Thank you all. Bye.